You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is 1 p.m. Central, 2 p.m. Eastern. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. Glad you guys could join us here today. Yet another crazy end to a crazy week. We have a lot of fun in store for us today. Of course, keep those questions, those comments coming. We do love to hear from you guys. You have a lot of them. We'll try to get to as many as we can. We have been doing so for months now here on the network. And of course, if you like what you listen to, make sure you keep those reviews coming. Keep the new folks discovering this program, particularly these last few sessions. A show like this could come in handy for a lot of folks out there. So keep those reviews coming on your platform of choice so new folks can continue to discover this long-running program. And joining me on the old show today, first off, we got a newcomer joining us on the program today. So let's start there because it's kind of fun. Holding down the MIAX hot seat, we've got Mr. Jim Carroll. He's the Senior Vice President and Portfolio Manager over there at TOROSO Advisors. Jim, welcome to the Volatility Views program.
Thank you, Mark.
And Jim, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the options and indeed the volatility space, or what is it that brings you to Volatility Views today?
More in the volatility exchange traded product space. As you pointed out, I'm a portfolio manager and wealth advisor at TOROSO Advisors. TOROSO has three legs to the stool. One is a private wealth advisory business. One is an asset management business. And the third leg is a business called Title that helps people develop and launch their own exchange-traded products. Currently, across the platform, about $2.8 billion of AUM, AUA, and growing nicely. So, in particular, one of the strategies that I run is a long-short volatility strategy using the exchange-traded products.
Oh, so nothing really to talk about there at all. There's not a lot going on in that neck of the woods. You must be pretty bored these days, Jim.
No relevance to volatility views or the current market.
I like your handle on Twitter at Vixologist. Certainly relevant to what we're doing here on the show today. I like it. At the end of the day, I tend to dispense the nicknames on the network, so we'll have to see if that Vixologist stay. But I like it. I like it on Twitter. It's got a nice ring to it. And also joining us, a name that has a good ring to it as well, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball, welcome back to the program on yet again another just crazy end to a crazy week, sir.
Yeah, this is a weird one, right? We were up 80, then we were flat, then we were up 50, now we're down. And, it'll be interesting to see kind of the way things take us. But I don't have a lot of great reasons to think the market is going to be ending the day in the green territory at all. And this does set up our Thursday, Friday, Monday collapse type of trade that we've now seen this year alone twice. So this would be a third one, and makes a lot of sense to me. The move in volatility yesterday and the way everybody just all of a sudden braced for an absolute market dumping was quite phenomenal. I've not seen a move like that in a while.
Yeah, a lot to break down, so let's get to it with the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. You know that means it's time to review the week that was and indeed still is on the volatility trading and trending and development and unusual activity and all those fun facets. And as Mark alluded to, it is yet another topsy-turvy one here, listeners. We talking for a while here on the show that, the rally was in full effect. The bull was in charge. Nothing could seemingly derail it. Not the pandemic, not the lingering economic impact of the pandemic, not even civil unrest here in the U.S. All these things that you think would derail a normal market. The bull seemingly shrugged them all off, and aggressively so. I mean, we pretty much had the NASDAQ hitting new all-time highs not too long ago. And yet this week, it seems like the market collectively awakened to these little niggling doubts that we've been pointing out now for a while here on the program here, where it seems like things are not quite as rosy as you would think by looking at the overall valuation. And indeed, volatility levels showed a little bit of inkling of that as well. And it seemed like it took the Fed to kind of give everyone that cold glass of water in the face this week. Jerome Powell coming out saying we have a, quote, long road ahead. The market not liking that. Also saying that we're not even thinking about raising rates. So they put that correctly. And also kind of giving some guidance that, rates might stay where they are, which is pretty much effectively zero for quite a while, until maybe even 2022. So all of that combo really combining to spook the market. Of course, the World Health Organization coming out with some more dire news about the spread of the virus. Things that people have been saying for a while. So it's a no-brainer. All of these things are not really surprises, yet for some reason, I think it took the Fed saying them to make people all of a sudden coalesce to that. So we saw a massive annihilation of valuation across the board there yesterday, vol spiking. Coming into today's show, it seemed like maybe some of the bulls were fighting to get back into control. We saw a pretty strong open out there. We saw the S&P getting well over that 3,000. That 3,000 level is a pretty important level. Uncle Mike was talking about yesterday on the option block, obviously, how can we maintain north of that 3,000 level? And we got pretty far north of it, well north of 3,050 not too long ago. And then dipping back as we're speaking now back down below the 3,000 level. But we're vacillating. Are we in the red? We're in the green. We're in the red. We're in the green. So we had a rally. We're giving it back. We had a rally. We're giving it back. A lot of fun stuff to parse. Who knows where we're going to be even a few minutes from now, listeners, which is what makes the show so fun. Coming into the start of the show, VIX cash was shy of the 40 handle. Now it's back up north of that as well. So that put it up at the time almost 16 points, actually. Now it's at about 43, which puts it up 18 and a half, almost 19 points. 19 points from where it was last show, listeners. Similar deal out there in Spikes land. Spikes was at about a 40.5, not that long before the show started. Now it's at right about a 43, 42.85 out there in Spikes land. That puts it up almost about 19 points out there as well. So just a crazy town out there, I think is a technical term for what we're seeing in the vol space right now. Same thing out in VVIX land. Remember, it was well shy of that 120 level, which we typically use as a barometer for things getting kind of crazy out here on the show. It was shy of that quite a bit, and now coming into showtime was at a 155, so up 48 points from our last show. So yeah, the worm has turned quite a bit. Whether this has teeth, I don't know, but the vol products are certainly saying the game is afoot yet again. Jim, you're our guest here holding down the MIAX hot seat today, so let's start in your neck of the woods. A lot to parse, obviously. Let's start before we even get to this week, because you've never been on before. Give us your thoughts in general on what we've seen just over the crazy past couple of months, the insane sell-off, the massive spike in VIX and volatility, the almost equally insane rally and decrease in volatility, and then we can get to what we're seeing this week, Jim. A lot to unpack there.
I'll do my best. Mama told me 3 points and no more than 3 points. So here they are. Obviously, March was historic in terms of where we got to with VIX. And the reversal has been just as historic, with market indices making or approaching new highs. But what we also saw was that volatility remained elevated. It was below 15 in February when we hit the new highs back then. It has not gone below 24 during the COVID crisis. And part of the picture there is a realized vol, which got as high as 112 in March, didn't drop below 20 until the end of May. So a lot of nervousness just stayed with us. I'd also point out that before yesterday, the VIX term structure was flat as a pancake. Without the October election bump, the entire curve was only 2 points wide, and levels were at the 90th percentile of historical values. So even though the front month had returned to a slight contango, the overall structure was screaming indecision. Lastly, I would point out that from a longer-term perspective, volatility is seeing the cumulative effect of the spikes that started with Volmageddon back in February of 2018. As of April 13th of this year, the one-year moving average of VIX had crossed above 20 for the first time since dropping below that level in October of 2012. So that was 7.5 years of a low vol regime with occasional short-lived spikes. Last point I'll make is that the last time it crossed above 20 was in March of 2008, and it held above that for 3 years. And we know what 2008 felt like. So are we in a new high vol regime? Could be. We're going to find out.
I like that. Screaming indecision about the rally. I feel like I've been doing that exact thing for the better part of the last month, and it felt like I was just spitting into the hurricane, and then maybe suddenly the market suddenly awakened to that fact out there. I like that. Screaming indecision. Mr. Meatball, you're always screaming about something. Maybe you're screaming about indecision this week as well. Another, like we said, crazy, tumultuous week. You're looking ahead, you think, maybe to the Thursday, Friday, Monday sell-off. We had a listener who would agree with you yesterday on the option block. They chimed in. They said, if you think Thursday's bad, wait till Friday. Friday is sell-off day. So far, a mixed bag, but we'll see. Maybe there's something to that. Walk us through what's been lighting up your tape and what's been catching the eye of your trading legion over there this week, sir.
Well, I mean, just the way that yesterday turned into this big crescendo where we wiped out, basically the entire month's gains, which I think everybody watching the rally was watching in kind of disbelief. And, to have that kind of rally with the protests going on and the economy still half shuttered was, I think shocking to a lot of people. And then the way that the narrative kind of fell apart on Monday, and we started to see cracks when your quote-unquote V-bottom names like airlines, Boeing, industrials, energy, and financials started to sell off really legitimately on Tuesday and Wednesday. And then, we kind of got the big follow-through yesterday where they said, you know what, we better sell some of our huge winners in NASDAQ because, this thing could all get kind of dragged lower. And we're seeing some of that follow through today. I'm impressed that the NDX is managing to stay, not absolutely terrible, but, and the Dow is recovering a little better than the S&P, but I just don't. I look at what I see, and I see a market where I think we're going to end up. Who would want to be long into the weekend? So I think you see some selling then, and then if there's any bad news over the weekend, it could be really ugly. And then we have this ridiculous stuff going on with Hertz, which we have to talk about. Which, I don't know if you want to get to it now or later, but
are you referring to the fact that they're worth more now than they were pre-bankruptcy?
No. Well, here's the beautiful part. They're now going to sell equity. They're going to sell worthless equity. They want to do this. I can't believe the SEC will let it happen. But here's what they want to do. They know their equity is worthless and it's bid $3. They literally want to go into the market and sell $1 billion to cover their costs of being bankrupt. And rather than borrowing, so that this way, they said, the future, when we go through the whole bankruptcy process, whoever ends up owning our pieces and the bondholders will be in better shape. It's basically like, if you're dumb enough to buy this equity, then you're going to benefit institutional money even more. Good for you.
You can't fault them if idiots are going to bid it up, right? Take advantage. Take advantage of it.
Sell it to them. I've never seen anything like that. And Chesapeake is another one, and now Macy's is now, and Kohl's are the next two to go. And you still have JCPenney and there's lots of funness out there. So I can't wait to, this is going to be like shooting fish in a barrel. It's going to be that much opportunity floating out there if the retail world wants to run this stuff hotter.
I think you just hit it on the head. I think we just take that clip and record it and literally play it every week. We pretty much could have for the better part of the last few months, which is I've never seen anything like blank, because every week there's something new, whether it's in the vol space or in the individual name space. We said it before, it's kind of getting cliche at this point, but these are unprecedented times, listeners. Every single week, something new and unprecedented and quite frankly often ridiculous is playing out before our eyes. Some may argue this rally was pretty ridiculous. The pace of the sell-off could have been equally ridiculous. Why up so hard and then down so much hard? All of this is, just completely insane, to use the technical term. Now hurts all the madness. We'll get to some single name fun in a little bit. Let's get out to the futures side of the vol space right now. Obviously, we talked with John last week about what's going on with the Spikes futures. Hoping to have some more information on those soon. Obviously, this is not exactly a great time, listeners, to be going down hat in hand to D.C. and try to get something approved. There's other agendas taking place right now, other priorities. Things have been shut down, working with skeleton crews. Hard times to get things that are approval. So the Spikes futures, unfortunately, have kind of been stuck in this bad morass of bad timing pretty much ever since. But hopefully we're going to hear more about that in the near future. On the Bix Futures Curve, kind of interesting stuff, as no surprise to most of you listening out there that we're back in backward land once again. Coming into showtime, we saw a pretty hefty discount from the futures to the cash. The June future is about 1.5 points below the cash. That July future, almost 3 points, about 2.5 points below the cash. And we're seeing pretty much similar levels out there right now. The cash has obviously rallied a little bit, so maybe making that distance a little bit more out there. Jim, are you a big watcher of the VIX futures and indeed the volatility future space? And if so, what are your thoughts on what we're seeing play out there on the VIX futures term structure this week, sir?
Yes, absolutely. I mean, it is the VIX futures that underlie the exchange traded products, so I pay attention to the term structure. And as I noted, we've gone from flat as a pancake to now got some backwardation back in this thing, where we've got, the first 3 months above the October hump. So, there clearly is some fear back in the term structure. And again, the levels that we're seeing in the mid to high 30s and 40 at the front end are, up in the 90 plus percentile of historic values. So, anybody who thinks that, we're just skating on on this V-shaped recovery, I point to the term structure and say somebody is taking the other side of your bet.
Yeah, we've said it before. We'll say it again. The answers to all your volatility questions are lurking somewhere in that term structure list. It may not be readily apparent. You may have to dig a little bit, but the answers are lurking somewhere out there. Mr. Meatball, same question for you, sir. Obviously, we're back in backward territory. Anything catching your eye out there in the VIX Futures land, sir?
Yeah, we saw this start to happen earlier in the week. The telltale sign was on Tuesday, we had been up about 120 S&P points, and the VIX was up 1.5. That's usually not bullish, folks. And then, and by Tuesday, July was already trading over August. Even if it was June was under July, we had started to see the curve kind of look like a hook. And then, obviously, then yesterday we just went full on backward. But this has been coming for several days. My option pit traffic light had already switched to yellow and was, red by, green for VIX by the early morning yesterday. So this was a thing where kind of all of our indicators were saying, VIX is going to continue lower. Then one tripped the other way, then another, and then the rest all at once. So it was pretty incredible.
It was indeed. What else was incredible was the revival, shall we say, of a product probably most of you never even knew existed. It kind of fell off my radar, I'll admit, as well, which is the mini VIX. Good old mini VIX. Probably, no doubt, at least partially inspired by the just explosive success of the micro futures and now the options soon to come over there on CME land. Those are in the equity space. SIBO deciding to get back into that mini game by bringing back the mini Vix Futures. They just announced a regulatory filing to bring those back. They'll be 1/10 the size, same settlements, everything else out there. So obviously there's no launch date yet because they have to go through all the regulatory approval process, which, as we just said earlier, not exactly fun these days, but still kind of interesting. I don't know, Jim, they say this is aimed squarely at CTAs and, of course, retail traders out there as well. Does this excite you at all, the prospect of bringing back a mini VIX product, sir? Maybe, certainly one thing I've been noting of late is that the VIX futures volume has been just anemic. It's been falling off a cliff, the number of contracts that are getting cleared over there at OCC. So they have to do something. I guess the question is, Jim, do you think this will be the thing that will buck the trend and bring VIX futures back to life?
Well, I don't use the futures contracts directly, but when I saw that headline, it struck me that, I scratched my head and said, okay, who are they appealing to? They're not appealing to major institutional players, I would think. So is this a bid to the Robinhood crowd? Are they trying to expand access to the VIX futures trading to people who might not normally have the coin to trade the full contracts? It kind of put a little scare in me, to be honest with you, because we've seen how badly uninformed investors can behave with the products that are currently available. We saw the demise of XIV way back when. Do we need to come out with another weapon of mass destruction that people can play with and kill themselves with?
Well, it's hard not to echo that sentiment. We all lived through the debacle that was XIV. Clearly, people were in that product who had no business ever touching anything remotely on the inverse vol front. So those concerns are not exactly unwarranted there, Jim. Mr. Meatball, I know this one's been on your radar this week. Probably excited more than a few in your pit chat / Legion over there. What are your thoughts on the triumphant, some may say surprising, return of the mini VIX futures, sir?
Well, I think it makes some sense, right? VIX, VXX trading is way up. VIX futures trading is down. Well, how do you make a future that's maybe more accommodative to a retail trader, I got it for you. It's mini VIX. And now you have something interesting that kind of matches up to the options, which is also kind of interesting as well. But then it does say, hey, this is something for CTAs, money managers, things like that. SMAs, separately managed accounts, are able to do that. But it also said to me, I guess the VIX is going to explode again, because that's the only way you can see that kind of timing. I knew there was going to be some outlier move, either an absolute utter collapse or an explosion, as soon as I saw the headline, because that's kind of the way the world has to work.
Mini VIX equates to VIX explosion. I like that. Obviously, we'll know more when these things finally get approved and get listed. I can see Jim's concerns. I also can see there's a need for a little bit more nuance sometimes when you're hedging or utilizing things like, the E-mini leaps to mind. Everyone thought, what's going to be the use case for that? It turned out to be a huge hit, roaring success. E-mini maybe a little bit more straightforward than a mini VIX product, but still, the size-wise at least, you can see where they're going. And certainly the trend has been to smaller duration, smaller, more bite-sized type contracts. So they're trying to go do something to rejigger this complex. This doesn't give me as much pause as, let's say, a new XIV/SVIX might, but still, it is something that is worthy of note. Let's head on out to VIXland now, see what's lighting it up. No surprise, we're seeing a little bit of a boost. The ADV up about 30,000 contracts from last week to about 385,000 contracts, and right now, VIX pretty much on fire compared to recent days and recent weeks out there, where I said it's been trending lower and lower for quite some time. As of a few minutes ago, 886,000 contracts on the tape. So effectively threatening 1 million contracts. We'll probably get there today if all this back and forth keeps up out there. Right now, let's look at the top 10 out there. Despite all this action out there, a lot of it's been aggregated in the last couple of sessions. So it hasn't been a huge bump in the top positions out there. In fact, it only cost you 98,000 contracts to break into the top 10 in VIXland right now. 98,400 to be precise. That gets you to the AUG 60. So AUG 60s on the board. Interesting out there. Number 9, 100K, pretty much even of the June 37 halves. Number 8, 105,000 of the June 25 puts. Number 7, $1.07 of the June 30 calls. Number 6, 111,000 of the July 32 halves. Number 5, 112,000 of the July 25 puts. Number 4, $1.14 of the July 28 calls. Number 3, 118,000 of the June 15 puts. And number 2 and number 1, we got a pair of calls here. We got the June 80s, talked about these last week, 120,000 of those, and then the June 50s, about 130,000 there. So maybe a fun little vertical. Worth noting, these June 80s have come off a little bit since, in terms of OI, since the last time we talked about them, but still a decent amount of size open out there. If you're playing the home game there, listeners, only 3 of the top 10 positions, so 30%, coming on the put side of the fence. So perhaps that reflecting where we are yet again in this new regime. Certainly the last couple of days worth of paper has been a lot of calls out there. Total of about 7.7 million contracts open out there right now. About 4 million, exactly actually 4 million open on the call side and about 3.7 million open on the put side. Let's get to today. As of a few minutes ago, the big print out there today, 44, almost 45,000 of the June 42 halves. Also about 42,000 of the July 25 puts lighting it up out there. And also getting a little bit farther up the strike chain, we got the June 50s going up 40, almost 41,000 times. And then going out to July, the July 52 halves, 29, almost 30,000 of those on the tape today. That's not far enough for you. We also got the AUG 60s and AUG 50s doing about 27,000 contracts each today. So some strikes we haven't seen in a while suddenly making a bit of a surprise appearance out here on the tape. So let's get out to yesterday and see what we saw out there as well. Yesterday, a more active day, though. If today's pace keeps up, we're probably going to break that. Yesterday, not quite 1 million, but pretty darn close. 964,000 contracts on the tape. Yesterday, the big print, 56,000 of the July 47.5 calls, followed by almost 51,000 of the June 26 puts, and then about 41,000 each of the June 40 calls and the June 25 puts. Maybe a bit of a risk reversal going up over there. Let's round out the top 5 here. June 35 calls, 40,000 of those bad boys as well. Wednesday, back to the kind of old anemic volume we're used to seeing right about this time right now. 268,000 contracts on the tape, so pretty weak. The big print, 21,000 of the July 70s. July 70s actually taking the top spot there. 21,000, 17,000 of the July 26 puts on the tape. And that's kind of really it for an anemic day. Tuesday, 372,000 contracts on the tape. The big print, 35,600 of the July 20 puts and 21,700 of the June 23 puts. And about 20, almost not quite 21,000 of the June 37 halves going up out there. Monday, also kind of a quiet day, 320,000 contracts on the tape. About 45,000 of the June 23 puts was the big dog out there, followed by about 24,000 of the June 25 puts and 23,000 of the June 21 puts and 16,000 of the June 24 puts. That's the type of flow and the type of strikes we're used to seeing of late out there, not seeing these 70s and 60s and 50s and 80s popping back in. So again, maybe a sign that the worm has turned, or maybe just a sign that the near-term paper is decidedly bullish. Jim, anything lighting up your tape out there in the VIX options landscape this week? Any prints or any activity coming across your radar that really was worthy of note to you?
You know, to be honest, Mark, I don't focus on the VIX options market. It's just not a place where my clientele want me to be playing. So I'm laser focused on the exchange traded products.
Mr. Meatball, same question for you, sir. What's lighting up your tape, and what were your crazies in the Legion, which will forever be known as the Pit Chat to us here on the program? What were they up to this week? What was catching their eye?
Well, how about the fact that we are at an all-time high on the NASDAQ 100, and the VIX 80 calls are $1.25. How about that? Have we considered that the narrative of what you're looking at, folks? If you think that this is like it'll all be fine moment, take a look at what volatility is doing. Take a look at what kind of hedging is going on. Take a look around you. Take a look at, and then ask yourself, is this the trading of a market that's going to rally at 100 points tomorrow? Is this the trading of a market that was justified running back over 3,200? And if your answer is yes, then by all means, have at it. Now, do I think, I was asked this yesterday, do we think that we're going back to the March 24 lows? Maybe, probably not. But could we absolutely see another test of the 50-day, the 200, a lot of these the 50-day moving average, a lot of these numbers that are lower, back to 2,700, 2,800, those levels, 100% can happen. This is not, I don't know that this is a giant systematic change where we're going to see selling through the end of the month, but is this a reset back to logical levels around 2,800 and then allowing the market to maybe digest all the news around it? That would make some sense to me. So if you look at this market, and you look at the bid on 80 calls, and the way July really started to tick up last week, as all of these protests were going on, and I think we did talk about this on Friday, was, as all these protests were going on and no one was socially distancing, are we getting ready for a giant coronavirus pop? Are we getting ready for the economy to be completely shut down again by who knows what? What is going to be the economic recovery look like? Who's willing to get on an airplane right now? I am. My wife is not. I don't know. Would either of you get on an airplane? Stay in a hotel? What are your plans?
I have not done either of those. I don't foresee myself doing those anytime in the near future. I have seen photos of a lot of planes. Southwest flights sound like they're flying about a third full. Granted, that's a reduced schedule out there. So there are more people traveling. I said it on the show a couple weeks ago. Where are these people going when these airlines rallied like crazy and the volume was up? Where are people? There's nowhere even to go. Everything's shut down, let alone the other concerns about flying right now. But yeah, you're right. There are certainly a lot of other interesting shoes to drop. You did mention one of the magical words, Mr. Meatball, that is reset, because that's exactly what our old friend Mr. VXX did this week. We were just talking not too long ago about that guy who's been out there rolling his downside puts for size. Excuse me. He just took off July 35 puts for a lot of size, a decent little return on that, but certainly not what you might have expected to make under the circumstances and the amount of VXX move that we got. Again, indicative of how expensive things have been in VXX of late. He rolled on out to, I believe it was the AUG 30, 22 puts put spread out there. And that one we kind of talked about. An interesting one. It seemed like you may be starting to head towards that strike, and then this week, not so much. VXX pretty much all the way back up, and then some. Back up to the 35 strike, that wasn't enough. Back up to the 40 strike, that wasn't enough. As of a few minutes ago, at about 42.5 right now, listener. That's up 13.5 points from where we were this time last show. So all of you who have been looking for a little bit of a reset out there, I guess you got your wish. All of you who are aggressively fading, like our friend out there on that AUG 20, excuse me, I keep saying 20, AUG 30-22 put spread, perhaps not the move you wanted. But hey, it gives you a chance to get more at extremely inflated prices. So enjoy that one out there. Decent paper on the tape. Coming at Showtime, we saw about 317,000 contracts on the tape. That's probably popped a little bit since then. Yeah, about 410,000 right now. So another about 100,000 piling in during the show. The ADV, 224,000. Obviously, that's going to be ticking up pretty soon out there. The big prints out there in VXX land today looks like it's the June 40s, 15,000 of those, followed by the June 45s, almost 14,000 of those, and about almost 14,000 of the June 50s as well. So all calls all the time. In fact, the top 1, 2, 3, 4, 5, top 4 are all calls. You got to go all the way down to the July 47 puts at number 5 there. In today's volume, we'll break down the top positions in a second, but you got to go all the way down to the number 5 in today's trading to find your first put, perhaps a sign of where we stand out there these days. Let's break down what's open, what's sizable out there in VXX land. We'll just do a top 5 here as well because I want to get some time for your questions and everything else out here today. Number 5, 54,000 of the June 16 puts. Number 4, 55,000 of the July 23 puts. Number 3, 63,000 of the June 31 calls. Number 2, 96,000 of the AUG 30 puts. Again, that's our old friend with the vertical. And number 1 with the bullet, 105,000 of the AUG 22 puts out there. A lot to unpack. Jim, you said before you like watching the vol ETP space. Is VXX on your radar? And if so, sir, what do you make of this effectively massive reset we're seeing out there this week, sir?
Well, VXX, TVIX, UVXY, and you know what's interesting is you see a lot of activity in the levered guys. You know, it's as though we didn't learn anything the last time around. Whenever the activity picks up, the activity in TVIX and UVXY goes off the charts, and we certainly saw that this week. So, and if you know, I guess in my Twitter thread, and I'm not on StockTwits or you know, some of the other places where the real lunatics live. But, you know, that there seems to be a lot more mention in an environment like this of TVIX and UVIXY. Particularly, you know, UVIXY, you've got a lot of people who do trade the options on that thing one direction or the other. So there's been a huge pickup in activity across the board there.
What would you say is the number one? You mentioned TVIX. That's a product we frequently like to mention on the show here, usually in a bit of a derogatory fashion, but it's one of the last of the Mohegans out there in the vol ETP space right now. What are some of the big vol ETPs that you really focus on?
Well, I think, you know, I don't have the AUMs in front of me, but, you know, TVIX certainly has been, you know, colossal in here. And I think, again, you know, part of it is who's using it, because TVIX, for those who don't know, has no options associated with it because it's a note and it's redeemable. So there are quite a few people who prefer UVIXY, even though, you know, UVIXY used to be 2 times. Now TVIX is the 2 times. So, you know, the people who are looking for max leverage want to play TVIX, then UVIXY, and then, you know, poor old VXX, because it's only 1 times, just doesn't get the love that TVIX and UVIXY will get from some of the people who are playing this, you know, for maximum leverage.
Yeah, we said it before. We'll say it again. I think I like your comment about people having short-term memories on some of these levered, and indeed just these vol products like TVIX, which has had a checkered past, I think, to put it fairly out there. And that's outside of these tumultuous markets that we find ourselves in right now. So buyer, definitely beware, and seller, of course, as well, when it comes to trading a lot of these esoteric vol ETPs. Mr. Meatball, I know you're crazies in the pit chat, indeed the Legion. They love themselves some VXX. I know of late you guys have been staying a little away from the straight naked positions out there because it is a little bit pricey. Spreads and the other ways are kind of the only way to really get into it. What's been lighting up your tape and the tapes of your crazes out there in VXX this week, sir?
Yeah, it was interesting. Yesterday, as we were moving, I bought a VXX for our Vol Edge product. I put on a VXX 35 straddle, and by the end of the day, I was selling the call for more than the straddle that purchase price. So just goes to show you that the vol moves really, really hard. And, one thing I would remind people is pay extremely close attention to the assets under management on TVIX and UVIXI, because as those start to get really wild and really expensive, that is where we start seeing some of the absolute insanity in the VIX and the Vix Futures for that matter.
Yeah, we had that kind of danger zone red flag out there not too long ago in TVIX and these products where the AUM got so large it almost threatened to derail the product yet again and perhaps take a good chunk of the vol market with it. I'm not sure if we're quite there yet, but if these markets persist for a few more sessions, we might be back at that tipping point again. And, we kind of barely dodged that bullet last time. And it will be unfortunate if something like that does come to pass. Let's move on out to some of the single name vol. Mr. Meatball talking about his favorites, Hertz out there. Not a lot lighting up the earnings season right now from the earnings volatility front. Most of the big names have pretty much reported. This week we saw AMC, obviously in a hot sector right now, the theater sector, just because they have questions about whether they're going to be a going concern going forward, which means, of course, if they're going to follow the Hertz example, they'll be popping in the stock and selling more shares to people very soon. GameStop, another one Mr. Meatball likes to play the death watch for out there this week. Five Below, we had Chico's and Red Robin and Guess on Wednesday. Thursday was The Children's Place. Dave & Buster's, another one that has some issues about whether they're going to be a going concern going forward, as well as Lululemon and Adobe. And then Friday, Party City. Anyone buying balloons out there right now? I don't know. Probably rough times for them. If you like how the earnings vol is broken down across the entire season, theoptionsinsider.com is the place to go. We have an updated earnings season report there for you. Spoiler alert, a lot of underperformance, which surprised me. As I said before, I thought this was going to be a really rock'em sock'em robots cycle because no one knew anything. And that's usually a recipe for volatility. And yet we saw effectively a 90% underperformance. So 100% would obviously be effectively moving exactly what the straddles were pricing, and we got about 90%. So light out there, which I think definitely, at least for me, came as a bit of surprise. Let's see if your questions come as a surprise as well. It is time to open up and check your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it. First off, last show, we had, I think it was the Rock Lobster making a comment about how he thought the way Bix Futures were lining up, he thought that was going to lead to, at least in his opinion, a little bit more VXX decay. I think myself and a few others on the show last week gave him a little bit of counterpoint on that. But it was a fun discussion nonetheless. Bob Johnson chiming in during the show last week. I don't think we had time to get to. He said, ZIV hasn't moved yet. Room to go over the next 6 months. Mr. Meatball, we talk about XIV a lot as kind of this product that infamously joined the dustbin of history not too long ago and took a lot of assets with it. We don't really talk ZIV a lot. Is this one that's really on your radar as any sort of analytical tool, sir?
Yeah, it's one I watch because it gives you an idea of what kind of the back end of the curve is. It's an inverse of VXZ. And VXZ, if you don't know, has a much slower rate of decay, but it's also a lot more consistent. ZIV has a far safer, for those of you that want to short vol and have no understanding, ZIV is safer than XIV or any of those other ones because you're really dealing with the very back end of the curve. And it's out of those positions by about month 4. So it's an interesting to look at. It gives you a good idea of what the back end has been doing over a period of time.
Jim, if you want to weigh in on ZIV, have at it. Then also we have a question coming in from the live chat. This comes from Tony Weber, frequent listener out there. He wants to know what we think about buying a Nove July 60 call calendar in VIX. He wants to do it for actually a $1 credit, so taking advantage of a little bit of that backwardation juice on that July portion. He wants to know, am I heading for a Hertz donut? I like that. He wants. By the way, those are call calendars. Yeah, we got that part, Tony. So, Jim, if you have any thoughts here on this Nove July 60 call calendar for a $1 credit in VIX, have at it. Is that one on your radar? And then B, if you also have any thoughts on ZIV and perhaps its efficacy or lack thereof, have at it, sir.
No comments on the calendar, but echo what Mark was saying about ZIV. I think it has a place for people who want to express a view on volatility. It's a safer place to be, a little bit more stable. And I think it's underloved, underappreciated. And as a result, unfortunately, it doesn't have a lot of liquidity. That's the one challenge. But I think it's definitely something that people should be paying attention to. And on the flip side, as Mark pointed out, VXZ as the long piece reflecting the middle of the term structure.
Speaking of that term structure, Mr. Meatball, you never saw a call calendar you didn't like, especially out there in VIX land where the front end is oh so juicy. What do you think about Mr. Tony's idea for this July Nove 60 call calendar, sir?
I think that Mr. Tony does not understand the dynamics of how individual futures affect the individual expiration months. And it's not like trading a calendar in the ES or the S&P. And you have to have a clear understanding of the curve and how things can move independently. So the reason why November is the way it is there's this whole will the orange man be put back in office question that needs to be answered that is right in front of that maybe, just maybe, have an effect on some of that volatility out there.
Just maybe. We did a deep dive into time spreads and calendars and diagonals and all this fun stuff on Options Bootcamp recently. I encourage you guys to check it out. We made this point on that show as well. When you get into the futures options, it's not the same beast as when you're looking at it from a straight-up Apple call calendar, for example. Apple stock is Apple stock across all the months. No real difference there. On the futures side, you have effectively different underlyings for these different months, and that causes all sorts of fun things. Like, for example, what we saw in WTI not too long ago, the front month went negative. All those calendars got really crazy really quick. So it's a different beast when we're talking about out here in all things VIX land, and hence I think Mark's on to something about the, would you turn it, the orange man out there leading to a little bit of juice. Yeah, the front, I get wanting to sell that front portion of the curve because it is juicy, it is attractive. I get that. But, I think a little bit of perhaps being judicious. I think getting all that short gamma right now in that front portion of the curve when we are in such unprecedented era, particularly now going into a weekend where we've seen so much crazy things unfold over the weekend's literal weekend risk playing out. I'd probably be a little bit hesitant to tell you to run out and get on that one there, Tony. Let's see, Tim Morgan chiming in, give us a hard time. So what? You guys didn't have a 40 handle in your crystal ball predictions for this week? Yeah, spoiler alert, we didn't. Tim, I don't think anyone did. So we'll get to that in a little bit out there in the crystal. Maybe Jim did. We didn't talk to him last week, so we can pretend he had all this. He had all this predicted very easily. Next up, Neil S2 wants to know, do you think the implosion of the Canadian Vol Fund will spook other pension and hedge funds and keep them from entering the volatility market? This refers to, we talked about this a couple months ago on the show. I think it was back in early May. It's about a month and change. It was the AIMCO fund, the AIMCO Volatility Fund, lost about $3 billion out there. Anyone who knows out there, AIMCO is, of course, the Alberta Investment Management Corp. Anyone who plays in the vol space knows that Canadians are usually seen as pretty savvy, particularly in the pension and pension fund arena out there when it comes to knowledge of volatility, certainly more so than what we see in their counterparts here in the U.S. And so that took a lot of people by surprise that a Canadian fund would blow out like this. We talked about it on the show a little bit there, but Jim, I'd be curious to get your thoughts. You obviously play in the volatility asset management game. A, were you surprised to see this Canadian fund blowing out the way it did? And then B, as Neil wants to know, do you think this is going to spook other pension and hedge funds from getting into the volatility game, sir? Uh-oh, Jim, you still there? We'll get him back in a second. Mr. Meatball, same question for you. I'm not sure if you were on the show the last time we discussed this Alberta Investment Management Corp blowout out here, but what are your thoughts? I mean, you've been to RMC. You've seen the Canadian vol pension fund panels like everybody else has. They're usually in a different category. So A, did this surprise you? And B, do you think, as Neil wants to know, this was going to spook other players from entering that market, sir?
Well, I mean, they literally did, when I was at RMC, one of the Canadian pension funds did a presentation, I think I remember, it was called Selling Vol Safely. And, which I thought was kind of a funny name. And it basically was like, hey, when the S hits the F, we get the F out. And yeah, I don't know. I mean, you have to worry about the regulators and the state managers getting out of the way. But I think you'll be surprised. I don't know that it will.
Yeah, I mean, it'll probably take a few more. This is the first major blowout that we've seen up north of the border up there. Hopefully, it's the last. But you're right. It has been an interesting area of discussion of late. Hopefully, this is the first and hopefully the last of these type of blowouts that we're going to see out there. Meanwhile, it's time to see what we didn't see out there this week. It is time to gaze into our crystal balls.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, you know what portion of the show it is right now, listeners. It's time to get weird. It is time to get wild. It is time for the markets to be weird and wild. In fact, as we're closing out the show here, we're seeing markets back in rally mode again. So these are strange times here, listeners. The S&P north of the 3,000 level again, about 3,015 or so. So up not quite 0.5%. The Dow up about north of 0.75%, closing in on a full percent, and the NASDAQ about 0.15% in the green. And wrapping up the show here, let's see how our friends on the vol front are looking. Spikes back down to the 40 handle, 40.3 to be precise. So giving back a few of those precious points out there. VIX cash at a similar level, just a little bit north of the 40 handle. So as our listener pointed out, we did not have a 40 handle in our crystal ball last week. John was the most upside of us last week. He was right back in the Russell Rhodes game, right back at the 30 handle for this time this week. That was the closest. 10 points away, though, unfortunately, not going to do it. I was next closest. I was at 27.5, so I was about 12.5 points away, also not going to do it. The meatball was feeling the decay at 23.25, so about 17, close to 17 handles out there. Not going to do it either. So spoiler alert, there are no winners for this week, which means if he's got his connection working again, it means our guest gets pride of place. Mr. Carroll, are you there, sir? And if so, can you hazard a vol prognostication for us?
I am back. I hope you can hear me.
There he is.
We're having a little electrical storm where I live, and apparently it knocked me off the internet for a minute.
Well, before you do that, really quickly, if you have any thoughts you want to share on that Canadian pension fund kind of going the way of the dodo, and if it has any impact on the fund space, have at it. And then B, if you have a crystal ball prognostication for us, sir, feel free.
Yeah, the Canadian volatility trading blunder, as you put it, was certainly a surprise. You know, we do tend to think of the people up there as being pretty sophisticated, particularly in the pension fund space. But it just goes to show you that people can get a little ambitious and out over their skis, especially when it's not ski season. So I do think it has to have everybody taking an extra hard look at what they're doing in the vol space to make sure that there are no unintended consequences. But, we've seen blow-ups. It seems like every time we have an event, we get a blow up, we may hear about somebody blowing up yesterday that we haven't heard about yet. So nothing would surprise me in this world where everybody's trying to find a way to earn an extra nickel because there's nothing to be made in the traditional asset classes. In terms of a guesstimation of where we'll be next Friday, I hate to go first because I wanted to take the over of whatever you and Mark said. So I'll take 45.
45. Interesting. I was thinking levels along those lines. I'll go next because I was the second worst loser last week. I was feeling something in that range as well, kind of something north of the 40 handle. I'll be the charitable person that I am known to be, though. I'll give you a little bit of distance out there. I'm going to say this time next week, we're going to be at 42.25. So slightly elevated actually not that elevated compared to where we were just a few minutes ago, south of that. But right now, a couple of points north. I think we're going to see some more vol, probably some stuff popping off over the weekend, maybe some spikes to much higher levels, and then drifting around down by next showtime to probably where we are right around here, which is still obviously very elevated, very volatile. We'll need some movement to maintain that, but I'm just feeling this. Given the pace of what we saw yesterday and the weirdness that's unfolding today, that's where I'm feeling. All right, Mr. Meatball, I bought you some time. What are you feeling for this time next week, sir?
I want to buy your guys Strangle, is what I want to do. I want to buy 32.45 Strangle.
Sold to you, sir.
So I'm going to take. I think that we will be off from where we are today, and I'm going to say 35-35.
35. All right. Interesting one this week, listeners. So we got Jim playing the Russell Rhodes role going up north there to 45. We've got me at a nice, healthy, some might say prescient, 42.25. And the Meatball on the downside again. That's funny to say downside is 35, but that's where we find ourselves this week. 35. You have a crystal ball pick? Hit us up. Let us know. Love to hear from you guys out there as well. Just be careful. Calendars, whatever it is you're doing out there, be careful. Keep your powder dry. Loading up into any crazy weekend right now, probably not the way you want to be out there. But I want to go around the horn. Let's start with our guest. Jim, I'm glad you could make it here on Vol Views. I'm glad the weather gods have smiled upon you for the end of the show. Before they knock you off again, if listeners are intrigued, they want to learn more about what you're doing over there at TOROSO Advisors, maybe they want to hit you up with some questions about the vol space. Where should they go? What should they do, sir?
Find me on Twitter at Vixologist. DMs are open. I post a lot of charts and thoughts during the week, so find me on Twitter.
There you go, at Vixologist. I'm sure I've seen your handle coming through during our show in the past. We probably will again in the future. In the meantime, the listeners, hit them up at Vixologist on Twitter. Maybe get a nice charter graph sent your way as a result. Mr. Meatball, if I want to go join the Legion, a.k.a. the Pit Chat, a.k.a. the Vol Trading Club, where should I go? What should I do?
Sign up for our mailing list. Go to optionpit.com. We send out credible, valuable information every day. We warn people that this was in the cards all week. So, if you want to get the meatball insight, if you want my meatball fast pitch, then you got to go to optionpit.com and get yourself registered on our email list.
There you go. A meatball fast pitch. Get it over there. optionpit.com. Of course, check out our friends over there in MIAX land. MIAXoptions.com/spikes is a place to go for all the info, the data. You want to know when the futures are coming back, the release will be there, the video explaining what the heck spikes is, all the data you could possibly want on spikes, all there, and a lot more. MIAXoptions.com/spikes. And on behalf of Jim and the Meatball and our friends over there in MIAX land, and of course myself, I want to thank all of you out there for downloading, streaming, and subscribing, for all of you who've joined us throughout the entirety of our broadcast week here on the Options Insider Radio Network. I know a lot of you like a little bit of extra live fun stuff, so if you're listening live, don't worry. Maybe we'll turn on a little bit of fun extra credit for you guys after we rejigger here in the studio a little bit. So we'll give you a little bit of taste of extra fun live flavor from some other broadcasts we've done this week. Of course, if you're listening after the fact, we love you guys too. Stay safe out there, and we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.